Jai Hind everyone. Welcome to my YouTube channel which is Explore Yourselves, Banking and General Knowledge etc. Please subscribe to the channel and also please do like and share and leave your suggestions in the comment section. Today I am going to share about Public Provident Fund Account, in short PPF account. Public Provident Fund Account. The Government of India launched the PPF scheme in 1968 with the primary goal of encouraging people to save consistently and providing rewards for their savings. The scheme has now become one of the most popular long-term savings schemes owing to its benefits of tax savings, returns, and safety. It offers an attractive rate of interest along with tax exemptions on deposits, interest, and withdrawals. Public Provident Fund Account. PPF deposits are eligible for a tax rebate under Section 80C of the Income Tax Act. Rate of interest for the scheme is decided quarterly by Government of India. It is presently 7.1% per annum. PPF account can be opened at all Bank of India branches. Public Provident Fund Account (PPF account) features: interest. Interest is rate is declared by Government of India from time to time. Presently, rate of interest is 7.10% per annum. Interest shall be credited to the account at the end of each financial year. Interest for a calendar month is calculated on the basis of credit balance as on fifth day and the end of the month, whichever is lower. Tax benefit. PPF is investment which comes under the EE exempt category. The investments up to rupees 1.5 lakhs made in the Public Provident Fund are tax deductible US 80C of the Income Tax Act. The interest accrued is exempt from tax implications. The accumulated amount at maturity is completely tax-free. Other important features. PPF comes with an assortment of other benefits. Loan facility. The facility of loan against the PPF deposits is available from third to fifth year of deposit to the extent of 25% of the amount deposited at the end of the last financial year. The loan is repayable in 36 months. After maturity, the account holder can retain the account after maturity for any period without making any further deposits. The balance in the account will continue to earn interest at normal rate as admissible on PPF account till the account is closed. Transferability. Account is fully transferable among branches, banks and post offices. Other important features. Court attachment. PPF deposits cannot be attached by any court. Eligibility. Resident Indian individuals can open their PPF account. Guardians can open the account on behalf of minor child or person of unsound. NRI and HUF are not eligible to open PPF account. Loan. At any time after the expiry of 1 year from the end of the year in which the initial subscription was made, but before expiry of 5 years from the end of the year in which the initial subscription was made, the account holder may apply in prescribed form to the accounts office for obtaining a loan consisting of a sum of whole rupees not exceeding 25% of the amount that stood in to his credit at the end of the second year immediately preceding the year in which the loan is applied for. In case of an account opened on behalf of a minor or a person of unsound mind, the guardian may apply for the loan for the benefit of the minor or the person of unsound mind by submitting the following certificate to the accounts office, namely certified that the amount sought to be withdrawn is required for the use and welfare of so and so, who is a minor or a person of unsound mind or a person incapable of operating his account due to physical infirmity and is alive on this day of so and so. An account holder shall not be entitled to get a fresh loan so long as earlier loan has not been repaid in full together with interest thereon. An account holder shall be entitled for only one loan in a year. Investment amount. The minimum deposit is rupees 500 while maximum deposit is rupees 1.5 lakhs in a financial year. The deposit can be made either in lump sum or in installments. The deposit shall be in a multiples of rupees 100 subject to minimum amount of rupees 500 in one financial year. The discontinued account can be activated by payment of minimum deposit of rupees 500 with penalty of rupees 50 for each defaulted financial year. The deposit in a minor account is clubbed with the deposit of the account of the guardian for the limit of rupees 1.5 lakh under section 80C. Mode of investment. Contribution can be made through all Bank of India branches or Bank of India mobile banking app and Bank of India internet banking. Statement generation facility is available through Bank of India mobile banking app, Bank of India internet banking and Bank of India all branches. Facility of auto deposit into account by standing instruction is now available through all mode. Repayment of loan and investment. The principal amount of a loan shall be repaid by the account holder before the expiry of 36 months from the first day of the month following the month in which the loan is sanctioned, provided that the repayment may be made either in one lump sum or in installments. After the principal amount of the loan is fully repaid, the account holder shall pay interest thereon is not more than 2 monthly installments at the rate of 1% per annum of the principal for the period commencing from the first day of the month following the month in which the loan is drawn up to the last day of the month in which the last installment of the loan is repaid, provided that where the loan is not repaid or is repaid only in part within a period of 36 months, interest on the amount of loan outstanding shall be charged at 6% per annum instead of at 1% per annum with effect from the first day of the month following the month in which the loan was obtained to the last day of the month in which the loan is finally repaid. The interest on the amount of loan outstanding under the proviso and any portion of interest payable but not paid on any loan, the principal amount of which has already been repaid within the period of 36 months may, on becoming due, be debited to the holder's account. The interest recoverable shall accrue to the central government. The interest on outstanding loans which are not paid before the expiry of 36 months or paid partly shall be debited to the holder's account at the end of each year. In case of death of the account holder, the nominee or legal heir shall be liable to pay interest on the loan availed by the account holder but not repaid before his death. Such amount of due interest shall be adjusted at the time of final closure of the account. Nomination. Nomination is mandatory. Maximum number of nominee in PPF accounts are now 4. Period. The duration of account is 15 years, which can subsequently be extended for 5 years at a stretch for any number of time. Note: discontinued account may be revived during its operating period on payment of a penalty of rupees 50 along with arrears of deposit of rupees 500 for each year of default. Premature closure. An account holder shall be allowed premature closure of his or her account or the account of a minor or person of unsound mind of whom he or she is the guardian on an application to the bank in prescribed form or any of the following grounds, namely treatment of life-threatening disease of the account holder, his or her spouse or dependent children or parents, on production of supporting documents and medical reports confirming such disease from treating medical authority. Higher education of the account holder or dependent children on production of documents and fee bills in confirmation of admission in a recognized institute of higher education in India or abroad. On change in residency status of the account holder, on production of copy of passport and visa or income tax return, the rule shall not apply for the PPF account opened before 12 December 2019. Provided that an account under this scheme shall not be closed before the expiry of 5 years from the end of the year in which the account was opened. Provided further that on such premature closure, interest in the account shall be allowed at a rate which shall be lower by 1% than the rate at which interest has been credited in the account from time to time since the date of opening of the account or the date of extension of the account as the case may be. Discontinuation of account. Any account in which the account holder having deposited 500 rupees in the initial year fails to deposit the minimum amount in the following years shall be treated as discontinued. An account treated as discontinued under may be revived during its maturity period on repayment of a fee of 50 rupees along with arrears of minimum deposit of 500 rupees for each year of default. Provided that the balance in a discontinued account not revived by the account holder before its maturity shall continue to earn interest at the rate applicable to the scheme from time to time. The account holder of a discontinued account shall not be eligible to open a new account before closure of such discontinued account after maturity, provided that the facility of loan and partial withdrawal shall not be allowed in such an account and the account holder shall be prohibited from opening another account in his name under this scheme till final closure of such account. Facility of loan and partial withdrawal shall be allowed to regular accounts only as per the provisions of this scheme. The total deposits in a year as specified in shall be inclusive of deposits made in respect of years of default of the preceding years but excluding the default fee. Rates of interest payable in PPF accounts as notified by government for different periods. 1968 to 1970, 1st April 1968 to 31st March 1970, 4.80%. 1st April 1970 to 31st March 1973, 5%. 1st April 1973 to 31st March 1974, 5.30%. 1st April 1974 to 31st July 1974, 5.80%. 1st August 1974 to 31st March 1975, 7%. 1st April 1975 to 31st March 1977, 7%. 1st April 1977 to 31st March 1980, 7.50%. 1st April 1980 to 31st March 1981, 8%. 1st April 1981 to 31st March 1983, 8.50%. 1st April 1983 to 31st March 1984, 9%. 1st April 1984 to 31st March 1985, 9.50%. 1st April 1985 to 31st March 1986, 10%. 1st April 1986 to 31st March 1999, 12%. 1st April 1999 to 14th January 2000, 12%. 15th January 2000 to 28th February 2001, 11%. 1st March 2001 to 28th February 2002, 9.5%. 1st March 2022 to 28th February 2003, 9%. 1st March 2003 to 30th November 2011, 8%. 1st December 2011 to 31st March 2012, 8.60%. 1st April 2012 to 31st March 2013, 8.80%. 1st April 2013 to 31st March 2016, 8.70%. 1st April 2016 to 30th September 2016, 8.10%. Minimum investment 500, maximum investment 1.5 lakh. 1st October 2016 to 31st March 2017, 8%. 1st April 2017 to 30th June 2017, 7.90%. 1st July 2017 to 31st December 2017, 7.80%. 1st January 2018 to 30th September 2018, 7.60%. 1st October 2018 to 30th June 2019, 8%. 1st July 2019 to 31st March 2020, 7.90%. 1st April 2020 to 30th September 2024, 7.10%. Minimum investment is rupees 500 and the maximum investment is rupees 1.5 lakh. Public Provident Fund Account opening. Account opening is now available at all Bank of India branches near you. You can open your PPF account through BOI mobile Omnineo app also. And an individual may open an account by submitting an application at branch and online also. An individual may also open an account on behalf of each minor or a person of unsound mind of whom he is the guardian. Documents required: a recent passport size photograph, proof of address and identification, Aadhaar card, passport, driving license, voter ID card, job card issued by NRGA signed by the state government officer, letter issued by the National Population Register containing details of name and address, PAN card. If an individual does not submit the PAN at the time of opening an account, he shall submit the same to the bank within a period of 6 months from the date of opening of the account. If account is open on behalf of minor, proof of age of minor is required. If account is open on behalf of person of unsound mind, certificate from superintendent of mental hospital where a person of unsound mind is confined or treated as the case may be. Transferred to Bank of India. PPF account can be transferred from any other banks or post offices to your nearest Bank of India branch. Standing instruction. To make it easier for investor and avoid any penalty, Bank of India also provides auto to visit facility from your account starting from rupees 100 only. Apply online or visit your branch. Public Provident Fund Account transfer. PPF account can be transferred from one authorized bank or post office to another. In such a case, the PPF account will be considered as a continuing account. To enable customers to transfer their existing PPF accounts from the other bank or post offices to Bank of India, following process is to be followed. Customer requires to submit PPF transfer request in the bank or post offices where PPF account is held along with original passbook. The existing bank or post office will arrange to send the original documents such as a certified copy of account, the account opening application, nomination form, specimen signature, statements of all deposits and interest, etc., along with check or DD of the outstanding balance in the PPF account to Bank of India branch address provided by the customer. Once PPF transfer in documents are received at Bank of India, branch officer will intimate customer about the receipt of documents. Customer is required to submit fresh PPF account opening form and nomination form along with a fresh set of KYC documents. There is one pager available on Bank of India's website with all the information for the customer. Download forms. There are forms available to download on the Bank of India website. Application form for standing instruction, PPF application form, PPM form loan withdrawal, PPF form for closure of account, PPM form extension of account, PPM form premature closure, PPF form cancellation of variation of nomination, PPF form affidavit, PPF form letter of disclaimer, PPF form letter of indemnity, PPF account transfer form. Thank you very much for your patience.